Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today is Thursday, June the 26th. One more day until the end of the trading month, the end of the trading quarter, and we get a whole new set of candlesticks. Let's take a look at this big picture here. Let's look at the week and see what's going on in terms of price action formation. We still have April 7 as the big week of motion. Market turned absolutely around in that space, and let's move this up. We've got upside pressure. Looks like we are going to make new highs, and so that is very interesting in a market that a lot of people just really are not believing the moves up. I think that's got to do a lot with social media and the pervasive sounds coming out of there, but neither here nor there. Let's start with the E-mini S&P Futures. We've got a pullback from yesterday, but the pullback yesterday did not beat the volume upside at 3 p.m. at the 3 p.m. candlestick. So looks pretty good for more upside traction. I think it's a grinding move to the upside. I still believe we're doing a little bit of mean reversion in a big breakout pattern. So we're going to see candlesticks retrace each other. You want to wait for the pullback to take the trade long. Right now, we've got a little bit of a floor at 61, maybe 61.60. Nice breakout pattern here. Very nice breakout pattern. And we're going to look ahead for that. So pullbacks into 61.59, 61.60 buy zones. Let's look at the opening range. Opening range low, 6142. Opening range high, 6150. Yes, I leave the edges out. I just don't care about the half point or whatever. If we do pull back into the opening range high, should give us a pretty big volume event that should rock us higher. So ultimately, dips or buys. Momentum well above the halfway mark. Stochastic momentum also the same. Trend is up. This is a very bullish market. It's a very bullish market, and I still think it's being driven by shorts. So what do we expect today? Expected move on the low end, 6122. Expected move on the high end, 6171. We've tested it 3 times. Notice, with higher lows. So dips that come off any kind of news going to give us buying pressure because of the overall motion of the market. Okay, dips are buys. If you want to look for a beautiful space where there's a lot of heavy congestion from buying pressure, that's going to be down at 6140 to 6142. Remember yesterday I said, hey, listen, if it gets below 6138, maybe I said 6135, bearish action, but look at the reflexive move that came right off of the closing VWAP of Tuesday, just phenomenal. So it's a dip buying space, dip buying. Let's go to the NQ. Taking a look at the NQ, let's go to the weekly chart. We had a monster move, very big motion. Look at the size of this candlestick, really big, new highs. Everything looks absolutely fantastic. Look at the ranges that the traders had for their weekly option trades. I mean, they are scrambling. And remember, once we get up over this weekly patch, traders have to shift their delta, and that's going to cause reflexive buying. Bullish, folks. It's really bullish. So let's take a look at the formation. It is dip buying. Notice we break out, we pull back, and bounce again. Should we do the same sort of thing? I think yes. Not a runaway train. Here's why. I do believe we are in some sort of mean reversion that allows price action to continue to the north. Again, buy the dip. What's the opening range? Low 22,450, high 22,488. Tight, but take a look. Broke out of the top of the opening range, tested it twice, off to the races. Low of the expected move 22,354, high of the expected move 22,581. What's the best trade? In my mind, see this big bullish candlestick at the beginning of the day. Fades brought all the traders back into the bottom of that expected move. They fought over it, broke the low of the opening range, and then absolutely it held on to this 20 simple moving average, and off she rode. Look at the slopes. Up. Look at momentum. Up. Dip buying, folks. It is dip buying. Ideal price point for me, I would love to see it come back into 22,490. I'll be looking to buy in that area. I have an alert sitting at that zone. If, per happenstance, the jobs number comes out and we get a little bit of a reflexive dip, that's going to give it to me. If not, we're going to rise right over the day's expected move, and the buyers are going to be caught, sellers are going to be caught again flat-footed. Average true range all the way up at 22,776. We might see that Friday. I would love to see some consolidation here. I really, really would. It's going to make the market a lot stronger to the upside. We'll see if that happens, but I'll be looking around that 22,490 for the buy zone. Let's take a look at the YM. Very tight opening range. This one is actually doing what I suspect the other two indices are supposed to be doing. Mean reversion into this 63 simple moving average, consolidation. It looks fantastic. VWAP a little bit flat. That's what happens with a consolidation trade. Dips are clearly buy zones. Momentum very strong. Let's take a look at the opening range. Low 43,276, high 43,325. Also a dip. Notice traders came to the bottom of the box, recovered, moving nicely into the heavy congestion of the selling candle that was at 9 o'clock. Now notice, traders trying to sell up here at 43,432, but the bottom is lifting. And so they're going to try and try and try. Direction of trend tells us we've got upside. Now that number looks like about 43,513. Notice 44,000 is really where we should see in the next couple of weeks, easily. So dips or buys. What would be fantastic if we came to 43,133 and we had a buying opportunity right there. I would love that. 43,150, somewhere around there. Love that buying area. All right, let's take a look at Bitcoin. Bitcoin also, I believe, is in mean reversion, but a very big breakout that held, retested, and moved forward. Look, the most bullish candlestick of yesterday. And remember, we look at volume to isolate that candlestick. Traders have come to the bottom, tested the moving average. Look at these higher lows all the way up here, top of the range. And now we've got a topping formation. I expect mean reversion, but dip buying. Still, what would I like to see? I would love to see a test of 106,000. That would be really nice. As it breaches above that 106,000, I'll take a buy. But right now, this is the one formation that says, take a look at momentum. It's hunting for support. Now, you could be an aggressive trader and say, hey, I'm buying the space. Nothing's wrong with that. Buying the low at 107,320, absolutely nothing wrong with it. You need to have about a 300 tick stop. Not too bad. Or you could just wait for it and take the bounce. Now, if you wanted to short it, your stop would be the high of the opening range. So what is that opening range? Low, 107,315. High, 107,730. Looks good. This is a nice box of inventory accumulation. Nothing wrong with a buy zone right here as we trade back to the top of the box. Low of the expected move, 106,246. High of the expected move, 108,457. It's bullish. You just got to wait for those dips. You can try it here again, but you want to get out if it loses that 930 because it's probably got another 700 ticks to the downside to hold. And momentum tells us we are hunting for support. Let's take a look at Dr. Copper. Now, call Dr. Copper because copper is a very useful industrial metal. Let's go to the weekly. Take a look at this. Huge bounce area, right? Very big bounce area. I want to draw Fibonacci here. Top of the box. It's at the 2 area. Almost hit it on the nose. Expected move for September, a little bit higher. So notice this chart. This chart has a tendency to retrace. It really does. Dips are buy zones, but it's losing the top of the resistance zone at this time. So what does it tell us? Listen, above $5.04, we've got ourselves continued buying action to the upside all the way up into $5.36. If this continues to move up, it's also going to imply pressure on the industrial complex that uses copper. But copper is called Dr. Copper because it's telling us about the underlying usage of these commodities. Now, it is my impression and my suspicion that we are moving into a commodity super cycle. A lot of people don't believe that, but I do. And watching copper move like this is quite reinforcing. What is the trend? Upside. Very big upside motion. Opening range for copper, low end, $4.91. Top, $4.93 on that high. Okay? Expected moves pretty wide, but notice this was the low expected move, $4.95. We are well above it. Again, when we break through these edges, it causes reflexive buying so that the dealers, we call those guys the market makers, they have to turn and move in the direction of the equity to bring their delta to neutral. What is the condition here? We just had a high that could not hold. Now we're inside of this giant move. I wouldn't mind drawing Fibonacci here to tell us, hey, if we get below $5.02, we need to wait until it comes in and gives back some of that. For me, I don't like buying copper when it does this gigantic thing. I'd like to see it give back. I'd like to see it retest the opening range high, the 495 area. Ultimately, my sweet spot is buying it about $4.80, and it is very far away from that. So going to have to wait for this one to move in to where I want it to go. Let's take a look at nat gas. Natural gas had the gap up is the change of the instrument. And so we had a very tight opening range. Low of the opening range, $3.58. High of the opening range, $3.59. What are we trying to do? It looks like we're trying to fill the gap, right? What is trend? Down. Absolutely down. We had a reversion to the bigger moving average. Momentum is down. Trend is down on the big moving average we normally watch. We are under the VWAP and we are making lower highs and lower lows. That tells me they are hunting for a support structure. Maybe that's $3.50. I'm going to wait until it comes into that zone and stabilizes. Low of the expected move, $3.46. High of the expected move, $3.64. There's a lot of volatility sitting here in this price action event. We really want to be careful positioning because both nat gas and copper trade in 1/10,000th of a penny. Let's go to oil, right? Look at this. Complete mean reversion. Absolutely fantastic. Let's take a look at the weekly. Look at what's going on here in oil. Now, I believe there's about to be a reflexive move to the upside. I really do. Now, what has to happen is we have to hold the floor. And so the retest of the floor at 60 looks like an ideal move. If you are a stock trader, you could look at the USO, watch for the new dip buys, notice from a weekly formation, old resistance, new support. So my thought is that the traders are really trying to buy this 64.50-ish area. I sure do wish that I had taken my long, but sometimes that happens. Hesitation. And it is what it is. But now I'm being given another chance. So I'm going to wait for it to come back into that zone, see if all of this inventory accumulation actually holds. If it does, price action's not going to slip below maybe 62.35, and then it's going to bounce. That's my suspicion. So intraday, though, what are we staring down? Staring at oil, back on the 1 hour chart. What's our opening range? Low, 65.05. High, $65.41. Now notice. Wait a second. Why do I do that? Correction. Low, 64.94. High, 65.30. Okay, we're still inside of this box of motion. I want to expand it because we can see, but we are really at the bottom of an accumulation event, right? Low, higher low, higher low. Coming into this moving average. Momentum is right in the middle. No decisions there. Dips are buys. I am looking for this region intraday at about 64 to 64.20 to take a long. Could be very, very sideways. All right. But this is the base that I have been looking for in oil to tell me it's got further upside action. And if it's got further upside action, it's really going to start weighing on emerging markets in terms of how much oil is going to cost. That being said, opening range, it broke it on the bottom and on the upside. It looks like a megaphone right now. Could it continue to be a megaphone? Yes. What does that tell me? I'm going to look at the high of the expected move, $65.90. I'm going to look for a short there because I think it's going to consolidate a little bit more, especially since the slope of the 63 is so steep. I'm looking for a long at the base, the low of the expected move, $64.23. I really like dip buying here, but only into resistance as oil begins to consolidate. Absolutely beautiful formations. If we could do this for a couple of weeks, it will be a very sweet price action event to the upside. All right, let's take a look at gold. Also doing the same thing. Look at this. Well, let's go here. Let's go to the weekly. Very big area of consolidation. Really? Very big. So we're staring down all-time highs at 3,519 and lows of 3,139, and we're caught almost in the middle, right? Let me draw Fibonacci there. You can see what I'm saying, right? Look at that midpoint. $3,320. Week after week after week, it's holding that edge, bouncing a little higher, holding that edge. If it comes into 3,295 to 3,300, it's going to make a really pretty buy zone here. I do expect some measure of consolidation. Notice we have weeks and weeks and weeks where this thing consolidates and then explodes to the high end. Let's take a look at the hourly formation. Mean reversion came right back into the 63. Notice this formation, this happens, right? Stops moving lower, mean reverts, and now what the traders are going to try and do is change the shape of this. Either it continues down or it continues up. Opening range low, $3,344. Opening range high, $3,348. Price action, it's been at the base of the move and also at the high of the move. It's broken both sides. But look at this. See the higher low? This higher low tells us that buyers are coming up from underneath, but they're coming up with less force if we stare at the momentum event. So this could be very sideways. The weekly high expected move at the beginning of the week, $3,340. Guess what? We have exploded higher than that. No doubt about it. So traders are still trying to get below that edge. Still trying to stay above that edge because that's the expected low, expected high, 3,461. They're still trying to hold inside of this range so that they can close their week bullish, right, or positive because they don't want to lose $3,340. My thought is any deep dips down are going to be buy zones here. This floor of motion is holding us, and we should be able to keep this bottom formation alive. So low end of the expected move today, $3,330. High of the expected move today, $3,362. We already broke that, right? And now we're pulling back. I like the dip buying. I really, really do. Watch your size. Easily, because trend is down and momentum is down. It tells us the traders are hunting for support. So let them find it before you take the long. You want to take a short? You could, but it would be better to take a short on a bounce that loses 3,357. That's a lower high. See, because we've got high, low, lower high, lower low, lower high, lower low, retest of that prior high, lower low. Let the price action come in and then bounce to another lower high to give you confidence that you've got the edge to trade this market. That's it for gold. Let's take a look at SPY. Very sideways, probably waiting for the jobs number, the jobless claims, but gapping up. What is that? Look, inventory accumulation. This crazy wick, somebody getting out of their SPYs. Don't have any idea why, right? We can't extrapolate there. It's simply a number that says, hey, we got a big group of volume action in those 2 days. What are we staring down? This area of consolidation, right? So that makes a great buy zone at the bottom of that box. 606.79, right? The opening range low, $608.50. Opening range high, $608.52. No, $609.35. All right? We have not broken above the opening range high. We have not broken below the opening range low. We are stuck in the middle, right? Where we tested a little bit above that opening high. The weekly expected move, $610.34. But today, the expected move is $611.79. Remember, if we break out above the 610, if they don't immediately rotate downward within a couple of candles, the sellers are going to be on the back foot again, okay? Low of the expected move, again, $610, and high of the expected move, $611.79. Dips are buys. Look at momentum, folks. Momentum and trend. The thing is, we're really far away from that 63. I think we chop around. Look what's happening. We move up. We give it all back. We move up. Probably going to give it all back. I just suspect we are in mean reversion as traders try to balance their way through the chart. Okay, let's take a look at the Qs. Same sort of thing. Qs had a pretty good day yesterday. They really did. I mean, NVIDIA, Palantir, Meta, these guys are just exploding higher. And that's going to pop for the Qs. So the Qs popped up. What's the opening range here for their 4 o'clock candle? Low, $542.85. High, $543.96. Still in the range. Are we holding the low? Yes. We're moving sideways, so the breakout is most likely under this particular formation. What is the high of the expected move today? $545.15. Low of the expected move, $539.40. So there we have it. Dips or buys. very nice market structures across the wire in terms of movement, and a lot of traders are still flat-footed here, watching too much television and not enough chart watching. We're not going to be like that, though, are we? Yes. Hey, listen, be careful. Manage your risk. Just because it looks great to the upside doesn't mean you don't wait for the dip and figure out where your trade is wrong in order to get out quickly with a paper cut versus a hatchet wound to the chest. We don't want any of that. All right, folks, thanks so much for watching. I'll see you on the streams.